Now, Social Security. There are a lot of people in Greece who are retired. They worked in the States. They have some form of U.S. Social Security, either them and their spouses together. Well, I said to you earlier that there's a certain calculation for defining your gross income for purposes of having to file a tax return. Then there's a question of how much of your Social Security is subject to tax. So two different questions. One, do I have to file a return at all? And if I'm a recipient of Social Security, on the earlier slide, we were explaining how you'd go through that calculation. Now, if filing as an individual, your combined income, I'll explain that in a minute, is less than $25,000, your Social Security benefits are not taxable. If you're a married couple filing jointly and you earn less than $32,000, your Social Security benefits are not taxable. Up to half of your Social Security benefits are taxable if, filing as an individual, your combined income is between $25,000 and $34,000, or as a married couple, $32,000 to $44,000. If you're above those limits, 34 and 44, 85% is taxable if your combined income exceeds the limits. 85% of the Social Security benefits are taxable if a married person files a separate return. That's married filing separately. Now, what is combined income? Combined income equals adjusted gross income. Effectively, that's your gross income. There are several adjustments, most of which don't apply to most of us, plus tax-exempt interest and half of your Social Security benefits. So you go back to the previous slide, you add half of your Social Security benefits, let's say $10,000. You have 10,000 euros in a Greek pension, so you now have roughly 13,000 USD in your Greek pension. You have 10,000, of which you only include 5. Remember, you're only keeping half of your Social Security benefit. And then you have very little tax-exempt interest. Well, in that case, your combined income is less than the 25 or the 34,000.